All right, so picture this. You're checking your inbox a few days before the big election, that big presidential election we've got coming up.
Yeah.
And you see this email, and it's like a hot list of real estate deals, like right there.
Yeah, like a little insider information.
Talk about being in the know.
Oh, right.
Absolutely. Well, that's exactly what we're diving into today, a real estate broker's hot list. This email is from Eureka Business Group. They're a commercial real estate brokerage company in Texas. And the date on this email is November 2nd, 2024. So just days before we find out who the next president is.
Oh, wow. So right in the thick of things.
Right in the thick of it. And we're not just talking about the addresses or, how pretty the buildings are.
Mm-hmm.
This is a chance to see what's really happening in commercial real estate right now.
Right.
With all this uncertainty. Yeah, everyone's waiting to see who's going to be in charge.
Yeah, totally.
So we're going to break down the listings from this email, but we're also going to look for the big picture, the trends, the stuff that even a seasoned investor would say, well, it's interesting.
Right. I like it.
Okay, so the email starts off talking about election jitters and how things are slowing down before the election. Investors getting a little nervous.
Yeah, I mean, that's not really surprising, is it?
Not exactly groundbreaking news, but I'm curious from your experience, how does this actually play out? I mean, do investors really just stop everything?
Well, it's not so much a complete stop. It's more like things just kind of pause for a bit. Like everyone takes a breath and waits to see what's going to happen. It's kind of like a deer in headlights.
Okay.
I remember back in 2016, the month before the election, commercial property transactions went down by almost 15% across the country.
15%?
It was pretty significant. People wanted to know what a new administration would mean, what would happen with the economy, taxes, all that stuff.
Makes sense.
Yeah.
So does that hesitation ever actually lead to better deals for people who aren't afraid to, jump in?
Oh, absolutely. Uncertainty can be a good thing for investors who are ready to move. Sometimes people get scared and pull back, and that can cause prices to drop and there's less competition. It's like a clearance sale for commercial real estate.
I like it.
Of course, you have to be smart about it, but you can definitely find some good deals.
All right. I'm starting to see why this deep dive is a good idea. So let's look at this list from Eureka. They have a section called Under $2 Million Gems.
Okay.
And the first one that caught my eye is a medical office space in Crowley, Texas. They say it's pretty rare to find something like this in Crowley, and they mentioned a possible sale-leaseback. What is a sale-leaseback, and why would that be a good thing?
So a sale-leaseback is basically when the owner sells the property, but then immediately leases it back from the buyer. It's like they get to have their cake and eat it too.
I like the sound of that.
All right, they get cash from the sale, but they still get to operate their business in the same location.
So who usually benefits more in that kind of arrangement?
It really varies. It depends on the details, but it can be good for both sides. The seller gets some capital and the buyer gets a tenant who's already there and a steady income. Of course, the buyer also has to take on the responsibilities of a landlord, but that's where those NNN properties come in.
Yes. Eureka has one of those on their list, too.
Yeah.
Zero landlord responsibility. They say it's a high-traffic location off of I-35. They mention a strong guarantor and an 8.25% cap rate.
Sounds promising.
All right, so first things first, what does NNN even mean? And is 8.25% good cap rate these days?
Okay, so NNN stands for triple net lease, which means the tenant pays for basically everything: property taxes, insurance, maintenance, even repairs to the roof.
That's pretty nice for the landlord.
It's definitely a landlord's dream. And the cap rate, well, that's a measure of how much return you can expect to get on your investment.
Okay.
Think of it as a simple way to compare different properties.
So is there like a magic number for cap rate that means like buy this right now?
Not really. Whether 8.25% is good or not depends on a lot of different things.
I figured it couldn't be that easy.
A higher cap rate generally means a higher potential return, but it could also mean more risk. With all this pre-election uncertainty, we're talking about 8.25% is definitely something that would catch an investor's eye. They might be looking for that extra return to make up for the risk.
Makes sense. It's that risk and reward thing.
Exactly.
Now, you said the cap rate is like a simplified measure. So for people like me who want to understand a little more, how do you actually calculate it? What else goes into it besides just the risk?
So the basic formula is net operating income divided by the property's market value. But that net operating income, that's where things get interesting.
Okay.
You have to factor in the rental income, of course, but also things like vacancy rates, operating expenses, even property management fees. So two properties could have the same rental income, but very different cap rates depending on how well they're managed.
So there's a lot more to it than just looking at the price tag.
Definitely.
Okay, let's move on. Eureka also has some properties listed in the $2 million to $5 million range. And one that stood out to me was an industrial property, single tenant, annual rent increases, and it's surrounded by new development. What kind of tenant would be a good fit for that?
This is the kind of investment where you can pretty much set it and forget it. You want a stable tenant who's going to be there for a while,
Right.
someone with predictable revenue, like a manufacturing company, a logistics company, maybe even a data center.
Interesting.
And the fact that there's new development around it, that's a good sign. It means the area is growing and your property value could go up over time.
So you get cash flow and potential for growth down the road.
Exactly.
Speaking of location, they also have two retail centers in this price range. One is a value-add opportunity in a growing area, and the other is described as a stabilized center with long-term leases. What does all that mean?
Well, it depends on what kind of investor you are and how much risk you're comfortable with.
Okay.
Value add means there's work to be done. Maybe it needs renovations or better management. Maybe you need to find new tenants. It's higher risk, but there's also potential for higher rewards. It's like flipping a house. You put in the work to increase the value of stabilized property is more like a blue chip stock. You get predictable income, less risk, but maybe not as much potential for big gains.
So one's for the hands-on investor, and the other one's more for someone who wants to sit back.
Right.
Got it. The last one in this category is an assisted living facility. Zero landlord responsibility again. And they mentioned that the average household income in the area is pretty high. Is assisted living a good investment right now?
It's definitely something to keep an eye on. We have an aging population, and the demand for these services is only going to increase.
Right.
The fact that the average household income is high is interesting. That means this facility probably caters to a more affluent group, which usually means higher occupancy rates and less risk if the economy takes a downturn.
Makes sense now. The email mentions some listings in the $5 million to $10 million range.
Yeah.
But they don't give us any details. What kind of properties are we talking about here, and what's different when you're dealing with those kinds of numbers?
That's where you start to see the really big properties, large apartment complexes, office buildings, shopping centers, even industrial parks.
Wow.
You have to do a lot more research before investing. The financing is more complicated, and you really need to understand the market to make good decisions.
So it's high stakes, but also high reward.
Exactly.
Okay, so we've talked about specific properties, but this email was obviously meant for investors. What about the rest of us? Even if I'm not buying a commercial property anytime soon, why should I care about any of this?
That's a great question, and it really gets to why understanding commercial real estate is important. These trends affect local economies, job markets, even how much it costs to live in a certain area.
Right.
If you're renting an apartment, starting a business, or just trying to make good financial decisions, this stuff matters. Think about it. If new businesses are moving into an area that could mean more jobs, higher demand for housing, maybe even new shops and restaurants.
Oh, it's not just about buildings, it's about communities. Okay, one last thing before we wrap up this email. Kept talking about the election and how investors are feeling uncertain. What are some of the specific things that smart investors are probably paying attention to right now? What should we all be watching?
Interest rates are a big one. They have a huge impact on how much it costs to borrow money, which directly affects real estate investment. Inflation is another one. It reduces your buying power and makes investors nervous.
Right.
And then there's the overall political climate. Are there likely to be policy changes that make investment more or less attractive?
Yeah.
All of these things can influence what happens in the market.
So it's not just about picking the right property, it's about understanding the bigger economic picture.
Exactly.
Here's a final thought for you. We talked about how location affects property value. Yeah. But what about the other way around? How does the arrival of certain businesses like tech companies, logistics, hubs, even entertainment venues, how does that change a neighborhood and its value? That's something to think about as you see the world of real estate changing all around you.
That's a great point. I think we'll leave it there.
All right, until next time.
See ya. Bye.
Bye.